it had a policy that only was covered for about $10,000 worth of damage for flood. Ended up having about $20,000 of flood damage done. And welcome back. And today we got a special guest for the state. Today we're going to be talking about homeowners insurance. So what's happening with rates lately? Like, why are we paying so much? And it's just like they're out of control. Like, and just a little bit of information, rates of we've seen up about 21% is what I'm reading in the news lately. So today we got a special guest with us, Charlie Hebert with Brightway Insurance. And so he's a good friend of mine, and we worked with him a couple of times already. And so I think he'll be a great resource of information. So I guess today we're going to be covering, why they're going up, what can maybe help you get some lower rates, and then some tips for reducing those costs, and some maybe some misconceptions that we see about homeowners insurance. So thanks for joining us today.
Thanks, Scotty. Yeah, I'm glad to be here. I appreciate it.
Yeah, absolutely. So, I mean, I've seen it personally on our houses, and I've seen it with our clients. The rates going up. What's going on? Like, why are we seeing such an increase in prices?
So, obviously inflation has a lot to do with it. You look at the price of I was listening to the Wall Street Journal today, and they're talking about just the price of automobiles, like repair shops, is up 28%. And
Hmm.
so when you start looking at the cost to replace things, fix things, it costs more to insure them because that's what you're going to be, paying at the end of the day. If you have a $500,000 house and you have to pay a deductible to have a repair either to the roof or kitchen, or if you have a leak, it's going to cost more to fix it than it did in 2020.
Yeah, so there's the cost of material and the cost of labor has gone up because the
Labor's
price has
going
gone
up
up.
too.
And so we probably had like a little bit of delay. Like we saw other things increase first, and now the insurance is kind of catching up because all this cost to build and cost to repair has gone up as well.
A house today, the replacement cost is more than it was in 2020, 4 years ago. Like we started this insurance agency 5 years ago, and price just keeps going up because the cost of homes keep going up. The replacement cost, they factor in, if you had a house fire, they would go and they have to replace the entire house. They'll go and factor in how much it's going to cost to remove the debris. They also factor in the cost of labor. They'll also factor in the cost of, if you have a total loss, there's a possibility that other houses in the neighborhood were also damaged, which now there's a high demand for labor and materials in that area. So that could affect the price too. So it really depends on the situation.
Yeah, I mean, is the factor like these storms that are happening? Like we just had the hurricane pass through Texas a few months ago, right? So like, and it's happening more and more. It seems like it, at least in the news, right? Is that the big factor too? Like just the cost of like we're going to have storms happening more often, and so it's costing insurance companies more money, so they're just passing along some of that cost, or
Yeah, I mean, well, I don't know about happening in the future. Nobody really has a crystal ball and knows. But in the past, with all the claims that have happened, and the amount of money insurance companies have had to pay out, the billions of dollars, they have to increase their prices or they're going to go out of business. And so they have to increase their prices or get out the state. So we see a lot of insurance companies leaving the state, but we also have other carriers coming in the state to take on the risk.
so is Texas, how are we comparing to other states? Are we like higher to insure than say other states? Like obviously for like maybe in like the central of the country, it's not expensive, but are we like comparable to Florida, or are we better off or worse off?
I mean, any state along the Gulf Coast is going to have potential risk of hurricanes, and that's the big factor right now. To replace a roof is very expensive for these insurance companies, and flooding causes a lot of damage. Is very expensive as well, and so they've got to pay out these claims, and you know cost money. They've got to increase their premiums to be able to justify that.
Sure. So let's since you're talking about like the cost for the roofing, let's go on to the idea of like how much or how do these insurance companies determine what rates that we're going to be paying? Like what are the factors that go into this? Like are they influence the price premium?
So depending on, like in Texas, there's counties, and Louisiana, there's parishes. Depending on what county you live in, they take a risk factor. Like, has there been a lot of claims in that area before? Is there potential for
Mhm.
future claims? How old your roof is? How old your house is. The older your house, the more risk it is because it may not be up to code. The pipes may not be as durable or as up to code as a newer house. And so you're going to pay more insurance for an older house than a newer house because it's
Because you have copper piping versus PEX or something.
it can be not so much copper. They'll have piping that is made of like galvanized piping where it
Galvanized.
pours holes and it leaks and has, can cause mildew and other damages to your house.
Yeah, we've had houses with galvanized, we have the copper, we've had PVC, CVPVC, and now the PEX is the newest one. So like I've had a house with a galvanized, and I was always kind of worried about that could just start leaking because I've heard horrible stories about that happening as well. And I was always kind of worried, and thankfully we don't own that home anymore, but I was kind of always worried about that idea that, hey, it could just start leaking if you bid it, right? And that, it's 40, 50 years old, right? I mean, like the age of the roof. Now that's a big one for me because we've had the conversation before, and like how old is my roof, or how new does my roof need to be to get a good rate these days?
It really depends on what carrier you're dealing with. And so first you want to try to work with the independent broker. The difference between an independent broker and a captive agency is someone like State Farm or Allstate, where they just have one product to provide. And they really don't have a lot of flexibility there. Their hands are tied as far as like how much the prices are, if they're even going to insure in that area. You get with a broker like our agency, we've got, hundreds of carriers that we can choose from, which give you a better option and better, potential price from.
Yeah, and that's why we brought you on today, because I really wanted to have someone that could cross shop, and again, he can shop different rates for you, and he can shop different carriers for you to make sure that you're getting the best, policy for you. But so like the age of the roof, if I have a 15-year-old roof, what age is the roof basically like not worth anything anymore? You won't
It's
cover
hard.
it.
It's getting harder and harder to insure roofs that are 20 years old. 20
20
years
years
old.
old?
Yeah, I mean that's a very difficult roof to insure right now. And so 10-year roof, it depends. I mean, we have some carriers that really like new roofs for obvious reasons. If it's a brand new roof, they don't have to really worry about having to replace it unless they got like directly hit with a hailstorm or a hurricane or a tornado or something like that. But these older roofs, the older your roof is, the more, likely they're gonna have to replace it. They want to make sure that they're not put in that situation. So some carriers won't touch it if it's over 2 years old. They won't write it. And then some they have 10 years but after 20 years you should start looking at getting your roof replaced, just because it's going to save you so much money on insurance. A lot of times when you file a claim, your insurance will go up, but with a roof it's a little different. If you get a new roof and you file a claim, it's not going to hurt your insurance score. It's going to help you because now you've got a new roof.
Okay. Two, some of them are 10, and most of them are like, hey, 20, it's going to be pretty hard to get probably a good rate if your roof is older 20 years old, is what I'm hearing. So, but like, that's crazy to think about. Like, if I have a car and it's 2 years old, like, it's a fairly new car. Like, it should be good insurance rate. Like a roof that's 5 years old, I'm like, that's not that old, right? I mean, it's a 30, quote unquote, 30-year roof, right? Like in Houston, like say 20
So
years is
some
probably.
of these insurance companies, they may already have a big portion of the policies with older roofs. And so they're like, hey, look, we're not going to write any policies in Texas unless it's a new roof.
Gotcha.
They're trying to, mitigate their risk. They're trying to reduce the amount of potential claims they're gonna have to pay out. So they
And that,
won't they won't write new policies.
yeah, that makes sense because like from me as a client perspective, like I don't care about that. You have other policies, but from the overall, like they're trying to always spread around the risk, as that's what insurance does, is basically spreading risk around, right? So they're trying to making sure they have enough money to pay out the claims and stuff like that. So that makes sense. I guess I like when you put it that way, I understand it a little bit more. There's some tips that we could actually do as a homeowner, like when we're looking when we're shopping. Like what are the things that could help us? Did we increase the deductible?
Yeah, shop the deductibles. You can bundle your home and auto insurance. That'll help. You can also look at like what you're insuring. Get with an insurance professional who can actually look at what your policy currently has. Make sure you're not paying for something you don't need. Like you may have $90,000 of other structures. Other structures is anything not attached to the house. So that would be, for a lot of homes in Katy, is the fence. Like there's not many $90,000 fences, right? So you don't really need $90,000 of other structures if all you have is a fence in the backyard. Now, if you have a swimming pool and a gazebo or like a pool house, then then you may want that type of structure, that type of coverage. Another thing is, liability. When it comes to liability, you really want to, that's the biggest bang for your buck. You want to take advantage of liability. It doesn't cost a lot of money. The difference between $100,000 liability versus $300,000 isn't that much. So go with the $300,000 liability. Um, but other structures, the actual dwelling protection, you can sometimes lower that depending on the carrier. So you can look into that as lowering the price. And then of course deductibles. The higher the deductible, the lower risk for the insurance company. So that's a good way to save money as well.
Yeah, so what do we normally see on our deductible? Like when my first home I bought, it was like, hey, you got a 1% deductible, maybe even a 0.5% deductible,
Yeah.
which is pretty cheap. And that's not probably not seeing a lot of 1% deductibles anymore. Are we shifting more to the 2% or how we?
Yeah, it used to be, I had a 1% when I first moved to Katy. And then, now they have some carriers that they're starting at 3% for wind and
Ooh.
hail. So you can't even get a 2%. And so that's another thing that I would look at. If somebody gave me their policy, I would review what they currently have. And if you have a 1%, but your insurance premium has gone up and you have a 15-year-old roof, I may encourage you to keep that policy because you're locked into that 1%. You may never get a 1% again, and you got a roof that's 15 years old. And so, it may be feasible. It may be worth keeping that premium like it is for a couple more years to see if you can get a 1% uh, deductible to replace that roof.
Okay, yeah, so that's beneficial to people like you that you're actually going to just look at and see what they have and not just go, well, you need to go over here without actually comparing what they already have and making sure that they're not just spending extra money that they don't need. I really appreciate that. I mean, to me, that's what I always try to do too, is when we meet somebody like, hey, we want to meet you where you're at, but like make sure what decision you're making is good for the long term too, not just for the short term, benefit of me, right? But
Yeah.
benefit of them as a long term because you
You
want to
don't
keep
want to
them
save
around.
somebody $500 or $1,000 today, and then they end up spending $10,000 next year because now they have a higher deductible.
Yeah.
So
So, and if it goes up to, I've seen some people have to go up to a 5% deductible because we got to get the rate. Because when we're doing, when you're qualifying for a home, right, you might like some people, especially we deal with a lot of divorce situations where they're going from two incomes down to one to be able to keep that home. They've had to go to a 5% deductible, which I wasn't happy about, but I was like, well, that's the only thing that I could see to do to reduce that cost was to increase the premium basically
yeah.
or the
We see,
deductible.
we see a lot of that, man. And, when it comes down to like when you're buying a house and you're trying to lock in that interest rate or, get the house at that certain price, sometimes you may want to look at, increasing the deductibles to bring that premium down. So when you're at the closing table, depending on your debt to income ratio, especially, depending the life circumstance you're going through, you want to make sure you qualify for that loan. And so I'm very familiar with that. So I can help clients make sure they get qualified. And then later on, we can revisit and see about getting those deductibles, closer to where they're better protected.
Awesome. Yeah. So, and you mentioned bundling the house insurance and car insurance. Is that usually like a big savings or is it just like, is it just depends on the carrier and what they have and type of, it's like just so many variables. We're not going to be able to answer that question directly.
Surprisingly, it is a really good savings. And like for instance, with our agency, you don't have to be with the same company. So you wouldn't have to have like a Progressive Home and a Progressive Auto to get that companion discount. We can have you with SageSure or Safeco, and you still get that same policy bundle discount because you're within our agency. So you get the bundle, and it does save a lot. It saves money. It starts adding up. A couple $100 here and there, and it definitely makes sense. And then you want to bundle it. Another reason you want to bundle is you want to have all your insurance together in the event you do have to make a claim. You know who to call. You're calling the one agent who has all your stuff, and you're not trying to figure out, where's your insurance at.
Yeah, no, that's nice. I appreciate that. That's good too. I guess one last thing we'll touch on about maybe saving cost wise. Do you get any discounts for having like the home monitored for alarm systems and stuff like that?
Alarms,
Or
yeah, there's discounts for an alarm. So make sure if you do have a fire alarm or a house alarm that, burglar alarm, that you let your agent know because there's definitely some good discounts there. You can save a couple $100 there too. And, depending if it's local or a monitored alarm where it actually calls the authorities. If
Mhm.
it's local, it's just making a lot of noise. Either you hear it or your neighbors hear it, right? And then you call
Yeah.
911. But if it's monitored, if it's a central alarm, it's monitored and then it'll call the authorities. So you get a better discount for that because it's, a little more protection.
Okay, that's good to know. And then you get that, the idea that someone is watching out for you too. So that's a good thing to have too. What are some of the most biggest misconceptions you've seen about people with homeowners insurance? And like when they call you, like what are they most confused about?
So we have a lot of people confused about the replacement cost of their home because it's going up, which when the insurance premiums go up and you're not filing any claims, you're not doing anything different, and all of a sudden your insurance jumps up a couple $1,000s, it has to do with the inflation and it also has to do with the replacement cost of your home. So a lot of these insurance companies will go off of the square footage of your house. And
Hmm.
they're certain, like say it's $175 per square foot and you got a $5,000 square foot house. Well, they're now basing that premium off of that. That house used to be 500,000, now it's worth 750,000 based off of that number. And so now you're $250,000 more insurance you have to insure, which is going to directly affect the premium.
Okay. Yeah. So like basically because the cost to replace has gone up. So now we're just going to be it's just like, why does my price go up? I didn't do anything. I didn't make a claim. I didn't, get in a car accident. I didn't, nothing's changed on my end, but just the cost of replacing it has gone up essentially.
And you can see that. Now, if your policy goes up $3,000, $4,000, like 70% increase, there is a chance that that carrier is trying to get out of the market. And so what they're doing is outpricing themselves out of the market so that they force you to cancel, or if you're going to keep paying that, then they'll keep you.
So that sounds unusual to me too. So that's one thing I guess I'm confused about too, is like, why would they not want to be in this market? Is that
So
back to risk again?
yeah, I mean, they have to have so much, that they either outprice themselves out of the market or they won't renew at all. And you'll just get a letter saying, hey, we're not renewing, we're getting out of state of Texas. At this date, you need to get insurance somewhere else. And
Yeah.
so, and the good thing with our company is we get notified that, but a lot of times before the client, usually it's 30 days before, but we'll get notified before so that we can start shopping and be more proactive instead of reactive, and start looking, because you also get discounts for early. They call it an early bird shopping. Like when you get an insurance policy and you bind it like 10 days before the effective date, it's an advanced discount that you can get. And so, look, man, we're going to look at everything we can to get you discounts, bundling it, making sure you're not insuring stuff you don't need, and then, that advanced advanced quoting discount also. It all starts to add up.
As me being a homeowner and me being a loan officer and realtor, a lot of questions we see sometimes like when they go to bind a policy, just use that terminology, which I didn't understand it first before. I was like, so what does that even mean?
When you bind a policy, you are locking it in at that price based off of the information you gave prior to inspection. Now they're going to go out, they're going to inspect your home because they're going to inspect what they expect, right? Just like any good business person would do. You want to make sure that you're insuring something that you're taking the risk of something that you're aware of. So they'll bind it based off of the answers that the questions we answered. Then they go out there. Now, if they go out there and you have a 20-year-old roof and we said you had a 2-year-old roof, well,
Mhm.
obviously they're going to say, okay, well, the insurance needs to be more expensive. We're going to have to increase the rates, or we may not be able to insure you until you replace the roof. And they'll give you like 60 days to replace the roof. So if they find a hazard, whether it's a bad roof or a tree branch touching the roof or a crack in the driveway or some kind of a hazard on the house that they want you to take care of, they'll give you, 30 to 60 days to be able to take care of that. And so that's what a bound policy is. Like you're bound, you have insurance, you can go to the closing table with that policy.
But
Now
but they're
it's
going to reinspect at that
they're
point
going to
still.
inspect it and they're going to make sure that, based off of the question. That's why we ask a lot of questions about, the age of the roof, um, how old the house is, what type of plumbing is it, when's the last time the hot water heater's been replaced. We do our best to look on Google Earth to see a satellite image, make sure no trees are touching the roof, to give the most accurate quote that we can. Because I want to like under promise and over deliver.
Awesome. I've had insurance claims too, and like some guy's coming outside the house and he's taking photos. Like, what's this guy doing? He's like, oh, I'm like with the insurance company. Like, oh, okay. Like, I didn't. Like, you just see some people. They just come up, take photos. I've even had a policy where they came and they called me up, and I was kind of put back, to be honest. They wanted to go inside the house, and it was a rental property we had. And I was like, "Oh, you can't just call me and expect me to let them let you in." I was like, "That's not. I guess not, I
Yeah,
can't
you
do
need
that. I need to
heads
give them
up.
notice, right? Like that's it's not my house. This is my house, but I don't live there, right? So like I got to give them notice because they wanted to go in and inspect the I guess the water heater and the washer and dryer, right? Um and then they looked at the roof too and said, "Hey, trim back some of the trees too, or something like that." Even though they weren't touching the roof, I was like, "Okay."
Yeah,
So
we're
they were
seeing
kind
that
of
more and more. It used to not be so much. They would just go and inspect the outside of the house and kind of, take your word for it. Unless it's a high value home, then they want to go inside and make sure that, because if a home is custom and they have like, crown molding and, granite countertops and you list it as like a basic home, then, that's obviously not the same.
like the new homeowners again. So when they are looking to purchase a home, one of the things that we always tell them, hey, you need to shop insurance, right? And we usually get them connected to an insurance broker like yourself. And we're saying, hey, so what are the questions they need to be asking you because they don't even know what they're doing, right? So what's the main thing that you tell them or kind of inform them initially when they're talking to you?
First question I ask is like, when's the closing date, right? So, and that can change. We know that, and that's not a big deal. But we want to know when the closing date is, and then also, because that matters with some of these carriers. Some of these carriers they need like 10 days to inspect it, or before they bind the policy, it goes through underwriting, and they need to make sure it gets approved. So, the sooner the better for us.
Okay, so we
You
don't want to
or
be doing
us as
this
a
2 days
carrier.
prior to. We want to
Yeah,
like,
some carriers will, but not all of them. And you want to give yourself the best chance to get an option to look at all the carriers we have available. So the sooner the better. We'll look at that. We'll also ask, of course, the age of the roof. That's a big factor. We'll ask if anything's been added to the home, like a swimming pool or anything in the backyard that we need to know. Because sometimes if you look on HAR, it may be an older picture of the house and it doesn't have things that have been added to it.
okay. Yeah. So when someone's buying a home, they get in Texas, we have the option period, right? Usually it's, from 3 to 10, 14 days. But during that time, that's when they should be shopping insurance, right? So once they get that house under contract, they should be contacting you and say, okay, this is the house I'm looking at, and this is what we know about it.
Absolutely.
What can you do for me?
Yeah, that could be a deal breaker a lot of times. The insurance really can right now. So you want to make sure you get with an agent as soon as possible so that they can start looking at some options for you and see if you can make it work.
Yeah, started in real estate too. We kind of have a rule that we would use as from the lending side too, like, hey, we're gonna use a certain percentage of the price of the home to be like, hey, this would be a good ballpark number to use. And that number has crept up. And I'm right now I tell people like, or I kind of use the default 1% rule. And I don't know if that's good or bad for, and you can tell me or not, but like say looking at a $300,000 house, I was like, okay, it's probably going to be over $3,000 or $3,000 range to insure that home. Is that a good and fast rule right now in Texas or no?
No, I would contact an agent like myself and just say, hey man, run some numbers real quick because we have a lot of carriers. We have some carriers that I can run a quote fairly quickly, and based off the square foot and deductibles and age of the roof and the house, I can give you a ballpark number of what it most likely would be like, and then once I get more information, we can narrow it down and get it closer to where it's going to be.
Okay. All right, so that's good. Just I was just trying to look for a dirty rule to why we're still in the shopping phase. Obviously, I know there's so many factors. The square footage comes into play, the age of the roof comes into play, your credit, the client's credit score, and all those things come into play too. So there's just so many variables that I get people asking me all the time. Well, what's my interest rate going to be? I'm like, well, they fluctuate daily, and there's like 47 factors go into it. So I can't just tell you your interest rate today.
Yeah, I mean, a lot of the houses in this area, like if it's in Katy or in the surrounding areas of Houston, we're familiar with, how much different areas are based off the age of the house, age of the roof. We've done this long enough to where we can give you a rough estimate, but and unless you want to know exactly what you're paying, we need to speak to the client and get some questions,
For
and
sure.
there's a lot of factors that go into it right now.
Yeah, definitely. When we actually got the house and we know what we're looking for, we definitely need to start, get looking for the policy right away. And so you mentioned Katy. We're both here in the Katy market right now. We both here work in Houston. But what other parts of do you cover other parts?
So we cover all of Texas. We're pointing Louisiana and Alabama as well. So yeah, I mean we've got carriers that can put all three states.
Awesome. So I'll put Charlie's information down below, and I'll put it here on the screen here for you too, that you can contact him. Client is they got the house. We're in the option period. You gave them a quote. Like, when does that get paid? That's a question that I get asked a lot of times. When do they need to pay that premium?
So a lot of clients will escrow the insurance, which they'll pay for it through their mortgage, or they can pay for it, with a credit card, get the miles, get the points.
Would they have to pay at that closing, or they pay it, they can escrow that for future payments, right? But they have to pay
Yeah,
for the
we
full
can
year up front, right?
we can collect payment immediately and then post date it for the closing date. And if that date changes, we can always change it. Or we can just escrow it and I just need to get the mortgagee clause, loan ID number, things like that. And then we'll get that, we'll get it started, get it bound. And then what the insurance company does is it reaches out to the mortgage company to send that escrow check to pay the insurance. And
Yeah.
sometimes that can be a little tricky. So we'll get involved and contact the mortgage company to make sure it gets paid on time.
Awesome. Houston is flood insurance. So we've been talking about mostly the homeowners insurance policy, but the flood insurance policy is separate. Is that correct?
Correct. Yeah, a lot of times you have to buy flood insurance outside of your home insurance policy. We do have, like I said, we have a lot of carriers. We have some carriers that offer a flood endorsement, which are actually really good, but not everybody qualifies for them. So getting flood insurance outside your home insurance, usually it's $250,000 for property and $250,000 for dwelling and then $100,000 for personal property is what the flood insurance. And then you can get excess flood if you have more personal property that you want to insure. So you can add to the flood insurance.
So you can add even more. And so there'll be certain homes in Houston that's required to have flood insurance, but anyone can get homeowner flood insurance, correct?
Yeah, everybody should get it. I mean, if you live in Texas, you're in a flood zone. I mean, it you never know, right? I mean,
Yeah.
and a
Yeah.
lot of people use Harvey as an example. Oh, well, I didn't flood in Harvey. Well, think about how long ago Harvey was and how much concrete has been poured. So that water's got to go somewhere. So, and if you're not in a high risk area, it's usually very affordable. It's silly not to get it.
So like say if you're are you in a floodplain yourself, your home?
I am. So, we were paying around $600. Now it's more like $900. I wrote a policy today for $3,000. So it really depends on the home. Obviously, the more the flood insurance is going to be.
Yeah, because there's different floodplains. There's a 500 year, a 100 year. There's like you're in the floodplain kind of stuff, right? So all those
And
factors
I
come into
can, I
play.
can, like I can adjust the flood policy too, to where like I can lower the premium. I can maybe do $50,000 for personal property instead of 100,000. And that
Yeah.
will help with the price. The thing is you want to have something. You don't want to have anything because if your house does flood and you don't have flood insurance, your home insurance is not going to cover it. And so, you know, if you have $100,000 for dwelling instead of 250,000, well, it's better than nothing, right? And if you have 50,000
Yeah.
rather than 100, it's better than nothing. So I'll look to see, where it makes sense to kind of reduce your risk. We don't want to have some kind of generational loss, right?
Mm.
If something does happen, you don't want it to where it's going to affect your livelihood and your generation.
Yeah, no, that's good. That's a good idea because like that's where a lot of people's wealth is in their house, right? And if you don't have that thing insured, well then, oh, I got $200,000 of equity, but then the house burns down, you don't have it insured. Well, now you got no equity because you got no house. So, no, that's flood insurance is one of those things too that like I didn't understand too before becoming a homeowner. Like, why is it different? Why do I need it? And then you just made a great point there that hey, making sure that you have flood insurance even if you're not in a floodplain, because you don't know what's going to happen ever, right? You might get 10 inches of rain fall on your house, right? And that's happened before in here in Houston. We get those isolated storms that it's floods in just
Right.
this neighborhood, right? And it's too much water to move quickly. And it just gets backed up in the houses. And now people that weren't in a floodplain now have the whole neighborhood flooded, right? So definitely smart to keep the flood insurance there.
Some home insurance policies will have like a jewelry endorsement or like, something where you can show your guns or, artwork.
Mhm.
And I always recommend to get that outside your home policy. We have a company called Jewelers Mutual that we'll use for jewelry insurance. And the reason why is because if you have some jewelry that gets lost or stolen or broken and you file a claim to get that fixed, well, now that's going to go against your insurance score.
Mm.
You have next year you have a pipe that busts and you file another claim. And then the next year you have something else happen, you file another claim. Well, then that insurance company is going to eventually drop you or it's going to be very difficult to get a decent premium because you now have a history of a lot of claims. So, like I said, it goes back to the generational change. Like if it's not going to like someone steals your wallet, that sucks, right? You mean you're out maybe a couple $100 and you gotta go get a new driver's license, but you don't want to file a claim for something like that. You want to go
Mhm.
ahead and just take care of that yourself. Same thing with a windshield. Like with auto insurance, if you have to replace your windshield and you go pay cash, you might only pay like $600 to change out your windshield. But if you file a claim and they go to that same person, that same company, they're going to charge them $1,500 because they can, because the insurance is paying for it, right?
Mhm.
And now you're going to end up paying 3 times what you would have paid if you just came out of pocket and paid that, $600 and took care of it yourself. So things
Yep.
like that, you want to look at and really be careful about filing a claim. I mean, file if you have to, but if you don't have to, try to fix it yourself.
So speaking of filing claims, like, so we just had Beryl move through here, Houston, a little bit, this year back in July, and we had a lot of fences down. Did you get a lot of calls about people like, oh, is my fence covered in
Oh yeah,
this?
they
And
did. They called, they wanted to. Then when we looked at it, it wasn't worth it. It was like
90%, was there any of them worth making any claims on?
we didn't file a claim for any of the fences.
Because it just, you're going to pay your deductible, right? And your
Right.
deductible is 1 or 2 or 3, 6%, whatever it is, right? And then so you have to meet the deductible before they'll pay anything, right?
Right. But if the fence is messed up and the side of the house and the garage, then it's all included, then it makes sense to do that.
Okay, because then you could be part of the
Right.
attachments to the house and everything like that. Okay, so I'm gonna ask the audience if when's the last time that you've looked at renewing your policy, and if you haven't done that in the last X number of years, when if they've had their policy for 3 or 4 years, is it time to reshop again?
You should always have somebody review what you currently have because life happens, things change, and so the things you may have had before you don't need to have, or you may have something now that's not covered that you thought was. So these policies, they're not complicated, but if you're not looking at them every day, you can overlook something.
Yeah, there's definitely one of those things that when I get on the policy, I'm like, what do I have on here and what don't I have? I have one personal story that I was kind of with an insurance company that I had. We during the freeze, right? The great freeze of 2021, we had one of our rental properties, copper pipes started freezing, right? They had no power, so nothing you could do about it. The whole house is down to 20 degrees, right? And when those pipes, warmed back up, they started expanding. The ice expanded and melt and busted 3 or 4 different spots. And so it flooded the whole house with water, right? Got the water shut off as quick as we could, but it still flooded the whole house. And one of
Mhm.
the things that I didn't know, and I was really disappointed with the current insurance company that we had, was that it had a policy that only was covered for about $10,000 worth of damage for flooding, and so I was kind of limited on that, and I ended up having about $20,000 of flood damage done. So I had to take a big loss, about $10,000 that came out of my pocket personally. So it was a big loss. So being underinsured can really cost you a lot of money. So that was a really painful experience that I had. So that's why I always encourage people to make sure that they're covered and covered well.
Yeah, yeah. You got good insurance ain't cheap, and cheap insurance ain't good.
I like that. I like that. I'll use that. Make sure I'll get that up front. So no, that's good. Well, thanks so much, Charlie, for being here.
Thank you, Scotty.
Yeah. So as always, we're here to bring you real life experience to all your real estate needs.